right, traders. This is Blake Morrow. You were listening to the uh, Morning Edge. I had to think where I was at for a second. I got up kind of early this morning. I got up like 2:15, and for those of you that don't know, it's 4:30 in the morning here. I got up at like 2:15 this morning, and everybody's like, "Dude, what are you doing up so early?" And I'm going out of town on vacation in a few days, and I just have a lot on my mind, like making sure I got everything packed. We have people staying at the house, so it's like making sure everything at the house is all you know taken care of. And it's just like when like I wake up in the middle of the night and I start thinking about that kind of stuff, it's so hard to go back to sleep. So I will be paying the piper a little bit later. If I yawn sporadically today, you know the reason why. Um, it's one of those things. Anyway, let's talk about we got to get this analysis done. I can't really chit chat too much just because we have ADP coming out today early in about 40 minutes from now, so we're going to cruise through this analysis. So a couple things. All right, so the euro dollar ran right into trendline resistance yesterday. I actually shorted the euro. I didn't have any euro exposure. We ran up to towards this trend line. I shorted 12.25 and then 12.33. My cost average was like 12.30. I closed it out at 112. That was during that spike that came after that news that the ECB may taper. I basically shorted the euro here, closed it down here. Could have made more, but I just got out of it and I haven't done anything. But you can see how the euro is right up against resistance now. Can we break above this? Sure. We have a weak ADP number, and we're going to be trading up here at 112. I would say 112.55. Okay. So what you have to imagine, and this is the way you have to think about it in my point of view. And I have no euro exposure right now, not a single bit. Okay. If the euro rallies through here, like we have a weak number. Let's say the ADP number is expected, what, 170,000, 165,000. Hold on, let me figure that out. 166,000. So let's say we get a number that's 150,000. Okay, 140,000. We will rally through this trend line, probably spike through resistance here, just enough to trip up some people, and then reverse. So I would look for a short up here at 112.60 again. So if we can get it, okay. Support, obviously, if we have a strong number, then we're heading back down towards 111.50 again. And even though we dipped down there yesterday, you could see we didn't hold. So 111.50 is cementing itself as pretty key support. Okay, there's nothing really more to it than that. I don't think you need to make it overly complicated at this point in time. So let's just put it as range. Okay, so the cable. I am still short the pound dollar. My cost average is at 128.40. And that's because I added to it yesterday. Somewhere around where we're currently at yesterday, somewhere around here. I'm a little concerned that we spiked through this support, tripped up some stops. We are setting up a hammer, but it's really early in the session too. All right, so we hit the 127% extension of the last swing high. Now obviously we can go lower too. You throw in a strong ADP number, and the pound's the pound's gonna probably dip right back below 127. But I do think it's possible from here that we can move. Here, let's delete this. I think it's possible now that we can move up to 128. Am I going to stay short through ADP? I'm pretty sure. I haven't really made a decision yet. I may or may not. I don't know. I want to keep some short cable exposure. I just, it's like, I'd like to short some more at 128 if I can get it, but it's like, do I cover some down here? I haven't made that decision yet. I'll probably make that decision within the next half an hour. But anyway, move up to 128 is possible, and I think any move up to 128, you got to be a seller. Think about those poor souls that are still long the pound. They're probably begging for 108, because any move up to 108, you're going to get sellers naturally there. They're going to say, okay, well, thank God we got back to the breakdown point, because I really want out. But for those poor souls that are still long, they're very concerned that if we make it past a spike low, we're going to 126 pretty fast, I would think. All right, so 126.85. And I'll have to write 126, 126.85. And the reason why I write down 126 is because if you take what Paul pointed out yesterday, this is the post-Brexit, okay, low. It's a high. 127% extension comes in basically at 126. So we could quite possibly overshoot that, All right, so there you go. Dollar Swiss. So the dollar Swiss, we rallied right to resistance yesterday. Notice the underside of the trend line. Okay, here, let's go over to the 4-hour. Basically, the underside of the trend line, horizontal resistance, spiked slightly above. That news came out, that ECB taper news came out. We immediately turned, and now we've really, in my opinion, we have now really cemented our range, which is clearly between 97.50 and 98.20. And you have to imagine, if we get above 98.20, what's the ramifications of that? My trend lines are nowhere near perfect. So, this trend line that you see here could actually be like that. I'm venturing to guess that this is really going to be key resistance if we get above it. Now, do I think we're going to get above it today? Probably not. But I'm going to give you the buts. But we also have ISM services data. Now, Pauly doesn't seem to care about the ISM services data. I'm more excited about the ISM services data than I am Christmas. Just kidding, I'm not really. But since we are a services economy, I think the services data does mean a lot. So especially if the employment component inside of the services data is strong, and we have a strong ADP, could we theoretically break above this resistance going into Friday? It's possible. I would say there's probably like a 10% chance of that happening, but you're saying there's a chance. Dumb and Dumber. If you guys have never seen the movie. One of the funniest movies of all time, I would say Dumb and Dumber. The original, obviously. Okay, anyway. 98.20. Key resistance. Support. 97.40. We are in a range. Okay, continue to have hair. So I'm fully aware that those are contagious, and I'm so sorry. Dollar yen. My cost average right now is 102.40. 102. Oh, take that back. 102.15. Excuse me. I have added to my dollar yen. Why? Because I thought 103 was a big deal. I was hearing there's a lot of yen for sale at 103. Okay, that high there is 102.78, which is now 102.80. There are going to be buyers lurking down there. So even if we have a slight miss, ADP comes in at 150,000, 140,000. We might actually dip to 102.70. And then you got to be a buyer down there. I know it feels funny, but you do realize that we've come out of a You realize we've come out of a 10-month channel, and you got bond yields supporting this rally globally. Resistance right now, you take this move, high to low, 786 retracement, spike high over here, 103.35. You have the 78% retracement at 103.40. So I'm assuming, let me do something real quick. I'm going to snap this to the, make sure it's right to there. Okay. 103.41, 103.40. Key resistance. Now, we scale above that. We scale above that 786 retracement, we should challenge these highs. Okay, I would think. We get some, good data today, and we're gonna continue higher. Now, on any dip down to 102, you got to look at that as a buying opportunity. I mean, I will. I want to be long more dollar yen. So I would not mind a move down to here. Okay. So, I mean, if we do break back below this 102.80 too much, I mean, we're probably going to come down to 101.80. It's fine. It's fine. It's not my ideal plan right now, but I would take it. Okay. We're bullish near term. We're going into a longer term trading range, though, probably. I'm bullish right now, though. We've gone from bearish to bullish first time in months. And probably going to get to some sort of range once we get up towards 110. Realistically, I don't know. But that's what I'm thinking. Okay. Dollar Canadian. So the dollar Canadian, we just had a long drawn out discussion about the dollar Canadian. Crude oil is up against resistance. The dollar Canadian has mega resistance up here, okay, at 132.60, 70, somewhere in that neighborhood, okay. So right now we have 127% extension that comes in here, 161% extension comes in here. So I'm going to write down 132.75 as key. 132.75, that is key resistance. Okay. Support, you can see it very clearly right now. I don't know if you guys can see it. Here, and let's, you know what, I got to delete all that. It's clear support is right here. Crystal clear right there. I have no exposure in the Canadian right now. None. Not a single bit. But I'll tell you what, this thing's looking bullish. Especially with crude oil up against such key resistance. I mean, this thing looks like this thing could roll over pretty, or rally pretty hard. Let's do the Kiwi. Now the Kiwi broke below 73 or 72 cents yesterday. We do now have a head and shoulder pattern in play. Okay, the head and shoulder pattern points to 69.50. If you're around, if you use Forex Analytics, okay, I posted a pattern in play. You can see it right here at the bottom of our screen. I want to give away all of them, but you can see right here we have a head and shoulder pattern target 70 cents. I think we can go lower than that, but I think that round number is going to attract. Okay, I think it's going to attract you know, traders to a move down to you know, by the time we get to the channel support, you know, if you think about this trend line going higher, right? Just imagine us drifting lower. We're going to probably intersect with 70 probably around the same time we get to this trend line. So I'd imagine 70 is going to be pretty key support. But if we went, if we just dropped straight down right now, we could literally hit the target of the head and shoulder pattern and be within the confinement of the channel. Again, I'm not expecting that, not expecting a straight shot, but I do think I do believe that the Kiwi dollar is in a little bit of trouble right now. Okay, support 161% extension of this last move is 71.55. That should support us today. Resistance, any move back up towards 72.20 now is going to be a selling opportunity. If we get a weak piece of data, you want to take a rally up to 72.20 as an opportunity to be on the short side. And as you know, it's been bearish. Aussie. The Aussie dollar. I'm along the Aussie New Zealand. I don't have any Aussie dollar exposure, but you can see, Aussie US dollar, excuse me. You can see the support holding. We had strong retail sales out of Australia last night, which is helping support the Aussie cause. But I think if the dollar strengthens, Aussie's not going to be able to stop the, move through this support, and we'll probably come down to 75.65 again. 77 cents is resistance. Actually, you know what? I'm going to just say that resistance is now 76.50. And then 77 cents. And support is 75.65. Okay. We are in a range. We're still, whether you like it or not, in the apex of a big flippin' triangle. Okay, we're still in the apex of it, as annoying as it is. All right, I'm gonna go yawn a little bit. So, oh no, you know what? I'm not gonna yawn yet. I'm gonna do the dollar index for you. Let's go over to the dollar index. So here's our dollar index. Okay, now dollar index is going to run into some major resistance today if we have strong data. See this dotted line right here? That one right there? It's a big deal. Okay, let's get rid of some of this stuff. We don't need this right now. Not needed. We are stalling at the 618, so okay, we can mark that up. We've come down, bounced off. Look at where we're bouncing. Off of this trend line, off of the resistance. That means that today, and you got to take yesterday's spike low as support. 95.85. That was post ECB. That's post ECB, um, whatever. You know what I'm saying? Okay. The when they announced that they might, considering tapering, that was that spike low. Resistance. Okay, if we rally, yes, we have a lot of horizontal resistance here, but really the key resistance comes in at 96.70. You know, I I'm gonna take off this designation for bullish. I'm gonna put it on range still. But man, we are really threatening to go bullish here, especially if we break, we break this resistance, then we're going right up to the top end of this channel. That's not going to happen until post non-farm payroll. We're not going to get anywhere close to that, I don't think. But you can see, we get beyond this downtrend line right here. That's when you're starting to talk a pretty bullish move in the dollar. Okay. All right. Now I'll be back. I'm going to go yawn and get some more coffee. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. All right, so let's go over to the peso really quick. So here's the peso. Now, the peso over the last couple of days, we've realized that we're in a kind of a range right now. We still have this double top in place, so that's one thing that I have to take into consideration. I think we all have to take into consideration that we have a double top. Extension actually still takes us down to 19. Now, we've held support. Even yesterday, we were like, okay, well, we got support at this. This is us yesterday, 24 hours ago. We were right here. We said, okay, we got support at 19.15. We wrote down 19.15 yesterday. Do you know that we came within 1/100th of a pip of 19.15 yesterday? I must admit, that was pretty good. I don't pat myself on the back much, but man, that was good. 24 hours ago, we were here, and we came right down to 19.15. Pow! Now that's a 38% retracement. It's not like I'm doing magic or anything. It's it's just simple fibs, but it was pretty good, huh? Hey, again, sometimes I have to my arm hurts. Actually, I might have dislocated my shoulder from doing that, but hold on. I can't. I gotta pop my shoulder back into place, from patting myself on the back. It hurt so bad. So, all right. So there we go. 19.15 resistance. 1945. Why is 1945 a big deal? 1945 because that's previous resistance up here. So 1945 ish. Nick says the 4-hour down trend line supported twice yesterday. Down trend line supported twice. Oh, like this, I guess. Like that. Yeah, yeah. I mean, I would not be surprised to see the peso break down towards 19. I might be a buyer down there too if we can get it. I'm not saying we're going to. I'm just saying I might be a buyer down there if we can get it. All right. Let's go over the Norwegian Krona. So the Norwegian Krona, this is one of those things that you got to watch crude here. I think crude's up against some major resistance, and I pointed this out earlier. Now I have probably another 100 listeners that are tuned in now from when they weren't earlier, so I'm going to have to go over it again. But we were talking about the Norwegian Krona earlier. Interesting thing about the Norwegian Krona is we spiked below this low that we created in May, right? You can see how we spiked below there. Now, it's been bearish for the last couple months, and the Norwegian Krona has been bullish. The US dollar Norwegian Krona has been bearish. We've had like a, 7-8% correction over the last couple of months. It's pretty big, for a single currency. We spiked below those lows. We reversed. And now we're threatening to bounce back. Yesterday we wrote down resistance of being 803. Today the high is 803.83. So now the reason why we wrote down 803 is because that was the previous low over here was 803, 802.97, which is 803. All right. So what that means to us right now is that we have support at 797, resistance at 80. We're just going to write down 804 today. Oops, this is a range. Sorry. What was it? Support is at 7.97, resistance 8.04, and we are in a bearish trend. But if we break back above here and we start reversing, then that means that we're setting up a double or a false breakdown, which means that we could come back to 820 without much of an issue. All right, but again, I think it has more okay. So what was I going to say? Oh, I'm sorry. I was just chatting with Ron, Captain 210. Captain 210 says that I exceeded him by. Now I might be Captain 2/100s. Yeah. Now I'm expecting 2/1000s to be like the new benchmark to be breached. Anyway, okay. So back to this. So if we break above these highs, then I think we could squeeze back to 820, but I think it's all dependent on crude oil. It's really, but crude's still bullish. It's, still grinding higher, but we're running into some pretty key levels as far as resistance goes. So it's bearish for now. Now, this is an interesting, the US dollar Swedish krona. Okay, I'm gonna talk about this for a second. We had weak Swedish data overnight. Now, you would have thought that we had strong Swedish data overnight, but we actually had weak Swedish data. For real. Look, here, let me pull it up. I had it up earlier, but that's what she said. No, just kidding. Joking. Okay. So if you look at the Swedish data overnight, industrial production came out, it came out 0.2 worse than expected. And that was for year over year. Month over month, forecast was at 0.6%. We came in worse than expected. Or excuse me, 0.4% was consensus. We came in worse than expected. New orders year over year came in worse than the previous data. Now, you would have thought, based on what you're seeing here, that we would have had blowout data, but no, we actually had weaker data, which there's only one explanation to all this. There's much more to the story, okay? What that suggests to me is that we were talking about yesterday how this resistance that you see here, I'm not sure how it's drawn. I'm not sure if it's drawn like this, like that, like this. I think it's drawn just like you see it here. What I mean by that is that data, which should have actually pushed us higher, we actually came down. Why that's a big deal is because that signals to us that this technical resistance is major. That means if we break above 860, whatever those highs are, 863.15, 863, 863.30. So I'm going to write down 863.50. If we break through 8.6350, that means to me that this bull flag on a monthly chart is probably in play. That's a big statement. I'm saying right now. Big statement. But that would be huge. See, I think this resistance here is why we rejected. The market just tipped its hand overnight. It tipped its hand. Okay. Now support is at 850 still. But I'm going to tell you guys, if we break that, I bought the Swedish Krona yesterday. I bought it and sold it. Didn't. I think I've made a little bit of money, like maybe like barely anything. But I did buy it and sell it yesterday. But I'm telling you, we break that 863.50. I think that is telling us that we're actually going to break out big time. At least we're making a run for, multi-year highs. Okay, your bias chart's done. I finished it in time. Woohoo!